This is a big deal because it takes our attention from Wall Street away from macro and geopolitical and a little bit more towards whether or not companies are actually healthy in America. The banks especially. Are they?
Well, companies are certainly healthy in terms of their balance sheet, but we are seeing, of course, this slowdown in earnings growth. And a lot of that has to do with profit margins. When we look back at 2019 after this earnings season, revenues will be up about 4 to 5%, but earnings are going to be down slightly. Now, some of that is good, some of that is bad because labor costs are rising. So the rise in labor costs are crimping profit margins, which are offsetting the increase in revenue growth. So that's good for employees because those that are working are getting paid more, but it definitely impacts the earnings side for the employers. So then that begs the question, okay, what do employers do to mitigate this decline in profit margins? By paying more to their employees. Do they slow down hiring because they need to maintain their labor costs as a percent of revenue? Do they reduce hours for those that are working? Do they reduce capital spending? Because they're not going to sit idly by and take that decline in profit margin. So we need to see how their reaction is to this.
But there's an argument that you can make here that if the economy still does well, that should provide a backdrop for companies to make more money and still pay their employees more, still be able to shoulder the burden of higher costs, no matter what they are, commodity or otherwise. Is this the reason why companies now, are they becoming more cautious just because of guarding profit margins, even though revenues are rising?
Well, I think so, because if you're making less money, you have less excess cash to make those expansion plans, to make those hiring plans. So yes, it is a big deal if earnings begin to slow. That will then have a direct impact on economic growth. So, but again, those employees that are working are getting paid more. So it's not necessarily an all negative thing. It's a mixed bag. But yeah, as profits go, so goes expansion plans, and so goes the economy.
All right, let's talk about the crossroads of the economy and companies as well. Let's talk a little bit about the Boeing situation. The company now denied former CEO Dennis Muilenburg severance when he was ousted for his handling of that 737 MAX crisis. But according to a new release from the company, he will walk away with more than $60 million in pension benefits and stock as well. Outrage is already brewing from that release, with families of people killed in the crashes of Boeing 737 MAX speaking out. Among the comments, one victim's family saying, quote, he should be filing for unemployment. It's sickening. How many great engineers could they hire for that kind of money? All of this as Airbus is set to overtake Boeing as the world's biggest plane maker once Boeing reports its results next week. I bring this up because economists and even Treasury Secretary Steven Mnuchin have talked about the economic impact from the Boeing 737 MAX grounding and production issues. Is Boeing one of those situations we have to watch with regard to a bellwether possibly for the economy?
Well, I think in the first quarter, for sure, it could cut, the stopping of the MAX production could cut GDP growth by up to 0.5%. So it is profound. Now, obviously, the hope is the back half of this year, they get back to normal and we get that back. So while it's definitely, there's an impact, no question, I think the assumption that it does come back in the back half sort of mitigates the worries about the first half.